saying with IPL, they do oil sands transportation, they do natural gas, liquids processing, and then just conventional pipelines. And they also have bulk liquid storage, which they bought in Europe, and the margins on that haven't been that good. The pipelines are actually very good. They've got revenues of like 800 million, and the income is like 500 million. So, but last year for the bulk liquid storage, 202 million in revenues, but the earnings were only 7%. And I think there's maybe some talk of them selling that off, which would again reduce their debt. And I think they made a bit of a business mistake expanding out into that. It's certainly not as profitable as their other lines of business. So that's it for IPL. Like I say, I'll just continue to hold that one, and hopefully everything works out with the project that they're working on. I also have, just thought I'd mention it, but I do have Pembina pipelines, and it's rallied really strongly over the last, since the beginning of the year. We've gone from 45 up to 50, 53, 54. I haven't researched why that's taking place, but it's another pipeline company that I continue to hold, basically because of the dividend. The other one is Kinder Morgan in the States. Pays a pretty good dividend. The stock has came up a little bit, but in a fairly tight trading range. And the other one I've mentioned is Trans-Canada Pipelines, which I sold a lot off just because of the rally last year where it came up 50 or 60%. But I do continue to hold some of that. One other company I added to last week was Superior Plus. That's SPB on the Toronto. Again, it's a dividend play. Dividend 72 cents. Cash flow per share is $2.34, so it's covered. It's trading around $11–12 and gives a yield of 6%. And trading at 12, and TD has a target price of $16, and it's actually on their action list buy. There's only usually a few stocks that are on that, so they're one of their favorites right now. And basically it's a propane distribution company, a lot out west, and then also has a small special chemical business, but they're trying to sell that off and then just focus on the propane distribution. This one I've had on and off for years. It's been a good dividend player in the past. Technicals on this one. It's one reason I did add to it here. You can see it's been in this $11, $13 trading range. It kind of dropped down here and then started to turn around again. So I just thought it was a good opportunity to buy a few more shares. And if you look at the weekly on this, it's kind of been in the $9 to $14 price range going back all the way to 2008. Of course, it dropped out of that in 2009. But so I do trade these ranges a little bit, trying to get some capital gains on top of the dividends, and then you can end up with a total return in the low double digits if you kind of get the timing right. Let's did one more purchase, and that is BGC Partners. Again, this one I've traded in and out of over the last decade. It's basically an electronic trading kind of platform. It's an interdealer broker that provides voice and electronic execution for banks and brokerage, investment banks, like for trading bonds, fixed income securities, foreign exchange, credit derivatives, futures, all that. And it's pays an extremely good dividend. You'd think the company was in financial troubles, but it's paid this dividend, a high dividend, many times in the past. And I think it's just a company that's not followed too much by the market. It's it's trading right now at $5.35. It's got a 56-cent dividend, and that gives you that yield of 10.48. And the dividend range it's fluctuated from about 48 cents to 70 cents, and but it's always paid a dividend going back like 10, 15 years. So, and management is committed to paying out 75% of post-tax earnings. So that's what they've been doing for, like I say, over a decade now. So the returns, when you put all those dividends in, it's been quite a strong performer. The price can be quite volatile. It's been as low as 3.5 and as high as 16. And so again, if you get the timing right on this one, you can get also a pretty good capital gain, which I've done in the past. The current PE ratio is 7.64, which is extremely low. It did sell off a year or so ago, as we'll see on the charts, because they expanded into real estate. I don't think it worked out, like real estate services and information. And they spun that off in 2018 and just returned to their core business. So the chart on that one. We can see here, they spun off that business. It went from 11 all the way down to 5 or so. We can see in the past we've had, run-ups, some over 100%. So we're down here in kind of the lower trading area, and people looking for yield. This could get bid up, up to $6 or $7. And on the weekly, so on the daily, we've been in this band here going back to roughly last August, and it's been trading nicely in this band. It broke down, and then on this lower trend line here, it kind of caught it, it stabilized and started to come back up again. So I decided to buy a few more shares. So that's basically, I've reduced my cash, I say, from about 35 to 30. If more opportunities like this come up, I'll slowly come back in the market, but I really want to see what earnings are going to be in the first quarter, see how this coronavirus, how long it's going to play out, and I think it's on economic data around the world, it's going to be a little bit more serious than what most news agencies are kind of projecting. So anyways, that's all I have for this week, and I'll try to get a video again next week. Thanks for viewing. Bye. Okay, you can make noise again. I've done my video. My 25 viewers. Okay? You got that? Got my video done.
Yeah, you can.
Do you hear that? Get all that information? No?
No, thank you.
What's that?
Don't feel it.
No? Why not?
You can use the first step.
What's it?